Next major dimension that we are analyzing in balance statement is the equity. So equity is the part of the statement that shows the proportion of ownership of shareholders of the business, and it's important to analyze and understand its percentage in balance statement. So it is also known as a net assets, and it is equal total assets minus liabilities. So using that formula, we can figure out the equity of the company. Equity also is one of the most common financial metrics during analysis of financial statements, and in order to understand the financial health of the company, it can help us to determine the worth, the real value of the company. And this measure represents the net value of the company. What will happen if the company pay all its liabilities, and what will stay after that? So equity can be either negative or positive. If the figure is positive, it's a good signal. It means that company has more than enough assets to cover its liabilities, to pay its debt. And in case if company has the negative equity, it is not considered as a safe investment because there is a risk of loan default and bankruptcy following to that default. So if the assets minus liabilities is a positive, that's a good signal, and we want to see that figure during the analysis. So positive net worth is important measure, and during analysis, if we detect that the assets are more than liabilities, yes, we can go ahead and recommend the investment in that particular company. So this is one of the indicators that guides us in the financial analysis world. So the components of equity can be retained earnings. Company has two choices. It can retain earnings and reinvest them to make the company grow, or the second option is to distribute to shareholders dividends, to pay them as a dividends. If during analysis we detect that company's reinvestment strategy is going to allow to grow company, it's going to bring future earnings, and also it will appreciate the company's assets, so that's a good positive sign. Also, we want to see some reasonable amount of dividend distribution. The other part of the equity is the treasury stocks, and these are repurchased or never issued stocks of the company. Why companies hold this kind of stocks? The purpose A, to sell it later, and in the future when company will have some needs in cash, so they can go ahead and sell and raise their cash and get cash flow in the company. Or having those treasury stocks unlisted, it protects company from the hostile takeovers. So having those treasury stocks, it guarantees that nobody will go and take over the company, But also having those treasury stocks, it gives some flexibility. If company will be in the need of cash, they can sell it and reach some cash money. So having that treasury stocks also is good signal. And the other part in equity or preferred and common stocks, we want to see the proportion between preferred and common stocks. As you might know, the common stocks, they provide rights to get a dividends, to receive return from the investment, but also they provide rights to participate in the management of the company. And preferred stocks, they provide rights to receive return from investment as dividends, and they are usually guaranteed. But shareholder of preferred stocks does not have a right to participate in the company's management decisions, so they don't have a voting power. That's the one difference between common and preferred stocks. And they are differentiated in balance statement in different accounts, so we want to analyze that one also. So they are listed separately. Preferred stocks listed separately from common stocks under that shareholders equity dimension, and we want to analyze and understand the proportions of those two main groups. Equity is not directly related to the company's market capitalization. Market capitalization is based on the current price of the stock, and equity is much more than market capitalization. So we want to analyze those two items in order to be able to understand the margin of safety and intrinsic value of the company. So finally, what I would like to conclude, if the asset side of the balance statement shows where money is going to, the liabilities and equity side of the balance statement shows where money is coming from, where the company gets the funds in order to continue its activities. So very important dimension, and in your project you also will dedicate some time to analyze the equity. Thank you for your attention and have a good time, and bye bye.